welcome back. I know we had a little bit of a break there. We had the holiday, and we just had to contend with some folks taking their vacation or their holiday time. This is episode 22. I can't believe we've had that many. I'm Mr. Poppy, also known as Superman by my family, since I made my money investing in cryptocurrencies. I'm joined today by our man Oz, who recently started investing in solar. He's saying that it'll be a boon thanks to Bitcoin miners, but it's not going to moon overnight. We're also joined by Mr. Mister, who recently shared some sound advice his grandfather shared with him, that it's worth investing in good speakers. And when he makes it, our friend Jared, who is investing heavily in projects out of Ireland because they keep doubling. Just a reminder, you can find the old episodes at weareccpodcast.buzzsprout.com. So as always, gents, the first topic of every podcast is Bitcoin. So I think we could sum it up by saying that it's currently trending at what would typically, in earlier cycles, be considered the historical low range of the cycle. Is that fair to say?
Yeah, I'd say that's more than fair. It's been ranging here for a while. It hasn't really aimed to go any lower, but at the same time, it's not really prepared to go up. So it's just ranging.
Yeah, that's a really good way of putting it. So I know at this point we're seeing the bears. The bears are getting a little bit restless, maybe a little frothy. Much like we saw last year, peak bull, we saw a lot of wild targets, 100K, 200K, a million. Now we're seeing some pretty crazy calls by the bears. Will they play out? I don't think the extreme ones will, but I will say, I don't know about you guys, the lowest I have charted on any of my charts right now is 10 to 12K range, because from a price volume perspective, there was a lot of historical interest in that range. And I think we'd see a lot of bids, and that's in a worst case scenario for me. I personally don't think we're going to go that low, but I will not dismiss it. What do you guys think? I mean, you think we're going that deep?
At this point, I don't think you can dismiss anything. Like you said, I mean, anything can happen. But I kind of agree with you that I haven't charted anywhere below 10K really. And that's like a worst case scenario, not expecting it to really hit that, just, kind of humoring the possibility. Mm-hmm. So I'm kind of relying on my old levels that, from backtesting back in like the 2020 to 2021 range. But yeah, I haven't really marked below 10K because while it's possible, maybe, I don't really think it's plausible at this point, in my opinion.
Yeah. I think that's a good way of putting it, right? You want to trade, you want to invest in possibilities. Possibilities and probabilities, and you want to do your best to ascertain which is which. You don't want to say that something is never going to happen, but you do want to say, well, it's less likely to happen, and I think that's where that 10 to 12K comes in at. One of the things that some people are talking about more and more, we have talked about this a little bit in the past couple of years, Mt. Gox. And for those who don't remember, I think that was the exchange that had 400,000 Bitcoin stolen many years ago. And they're currently sitting on, I think they have about 140,000 Bitcoin left. And per the multi-year, lawsuit, legal actions taken, they'll finally be releasing those to the traders, to the investors. A lot of people are worried that we're just going to instantly see, boom, 140,000 Bitcoins hit exchange and sell. I don't think it's going to go like that. I think if you've been forced to hodl that many years, I think most of them will probably continue to sit on it. What do you think? The investors have the option of receiving this back too in US dollars, Bitcoin, or BCH. How they will manage it? Like, does it mean that they have Bitcoin right now and they'll have to market sell it for some USD or some BCH before they hand it over? That I'm not sure. But that is what is being offered to them.
I mean, if you're around... Oh, sorry.
No, go ahead.
Okay. So if you're around during the Mt. Gox days, you're probably not going to care. I mean, you've been in the space for so long. I mean, you've practically been forced to stay in the space. potentially. But you've been around in the space for years and years, and I don't think this is really going to be significant because if you've stayed in touch with Mt. Gox or at least the Bitcoin, or you're remembering that, you probably are invested in crypto again, or you've at least stayed in touch with the space. I mean, if you were around back then, it's not really something you forget. You're there from the early days. So I kind of agree with you there, Pappy. I don't think that people are going to have some sort of mass dumping event because, I mean, they're probably still active in the space. It's a significant part of their life now. It's been going on for 5, 6, 7 years. So I just don't see a dump possible, really.
Yeah, and at the end of the day, right, what is the scale of this liquidity compared to, for example, like average net inflows and outflows on exchanges, right? Like what is the potential price impact of, let's say, a complete dump by all, 137,000 Bitcoins, right? What is that relative? This question to you guys. Do you guys know what that is relative to exchange flows?
I mean, on the crazy days, we have something like, I think it's 3 or 4,000 Bitcoin inflows on the big red days. But I mean, that's only a few thousand dump. It really depends on how many buys and sells are. But yeah,
well,
it fluctuates.
I guess to put it into perspective, when I'm looking at the net outflow, so this means after the buying and selling in a given day, the biggest outflow that we still had, meaning buyers, was on the chart I'm looking at is October 2019. Is it 400,000?
Damn.
Or maybe I'm reading that wrong. That might be right. The more recent one, 13 of June, we had a big one, and that was only 59,000. But I mean, that does go to show you. I mean, I think the markets would absorb it. It definitely would drive price down, though. I mean, if someone just goes in and dumps that many Bitcoins, sure, but that would be kind of dumb, right? You're gonna lose so much value by doing that.
So, I do see some folks dumping though, right? Because you gotta assume that folks got wrecked back in the day. It's possible they never recovered from that, and all of a sudden, if they come into what amounts to a potential, windfall of some, maybe not a windfall, but a chunk, right, of liquid, they might be more likely to sell that to help them recover, from all those years ago. I do think that there's going to be some dumping, but I tend to agree with you guys. I don't think it's going to be the full batch.
Yeah, and that's a good point because, I mean, in crypto, once you get hurt once, you don't really forget that. A lot of people get hurt by liquidations, this, that, and the other one time, and they never take the risk again. So perhaps, some people will be dumping because they got hurt so bad by that. They don't really want to risk it again because, I mean, who knows? It could happen again. In their mind, at least.
And it's possible that they're, despite them only being able to recoup a part of it, the price is so much higher than when they lost the coins that they may be in profit, right?
Yeah, that's a good point.
Well, now keep in mind too. Do you guys know what the price of Bitcoin was? So this hack happened in 2014, if I remember right. And if that's the case, you guess the price. I know we don't go back that often. I always forget the price in the early days.
Wasn't it 11?
I was going to say 900.
Oh, I'm thinking of another time.
No, you guys are way, way off. Wow. We're talking like a couple $100. Yeah, I'm looking at 15, 14. Yeah, 14. It was up to like 300-400. This chart I have up only stops in December 14. So actually it might have been a little more, right? It might have even been 1,000. I don't know. But yeah, a lot less than where we are now. We could have even gotten a few thousand. Even if it will, I'd have to make a new chart to check the actual price. But in any case, it's a lot of money. But it's certainly, you know what, I would be grumpy. I would be grumpy if I was receiving that, realizing that just a few months back, I could have been getting almost 70K for my Bitcoin.
That is crazy.
Yeah. So what else do we want to watch? And then let's move on from the Bitcoin. I love the Bitcoin talk, but it's also the least exciting. We want to be watching for the Fed still. That's not changed. We need to see that inflation come down. We need to see the Fed pivot. We need to see the Eurozone also wake up. It's kind of sleepy. They haven't raised rates meaningfully. We need to see these things happen. And also the Russia war. We need to see those tensions or even just a full retreat of Russia. And that's going to help with the energy crisis in Europe also. All those things would be great to see or at least some of those provide some relief to the market. And I think, like you said earlier, Oz, that kind of stuff is what's going to cap the potential upside move. Even if we find a floor, even if we say, okay, this is probably where buyers are going to come in. Even if this is where, like Sam from you were mentioning, Mr. Sam from FTX, probably one of the biggest whales in the space, said that he thought the worst was over, and he's probably right. He's the kind of guy that sets floors in the market, but
he has the visibility into the books of a lot of these big firms, right? And really, as much as it's been painful, we did need to flush out some of the leverage, right? And a lot of that leverage, being maybe even the bad debt that a lot of these firms have been carrying. If he's calling the floor, what that tells me is he's seeing that a lot of that leverage has been corrected, right? And that could be that's a possible setup for an upward move for sure.
Yeah, I think that's it's actually unreal how much unhealthy leverage was going on in the space. And I think someone put it eloquently on Twitter the other day. I read it was something like it only took 8 months and 70% drop and over $2 trillion lost to finally shake the perma bulls from the market. There's some truth to that. I mean, some of these guys like 3AC, they went down with the ship. They were a little too bullish all the way to the bitter end.
They might have really gone down with the ship because we can't find them right now, wherever the ship is. Sorry.
They're on the ship somewhere. Somewhere. Yeah. So by the way, the dollar index, that thing's been crazy. This morning it was a 108. I don't even know the last time it was at that level. I don't even want to know.
Have you looked at the euro?
Yeah, the euro.
Almost, it's close, very, very close to 1-to-1 to the dollar, which we have not seen in a while. And the pound is also very weak. It's near 2020 COVID lows. Mm-hmm. So the whole Eurozone really kind of needs to start waking up. Like you said earlier, they need to start doing something at the very least because, the dollar is just taking all of the strength out of everything right now.
The ECB, the European Central Bank, is why I said they're sleepy. They slept on the job this past year. And I understand it's more complex because you're dealing with a lot of partner states or member states that have different economic states and different economic needs. But I don't know. I think they're really behind the curve on that one. So last time the dollar was as strong was actually 22 years ago. Almost to the day, almost to the month, July of, I'm looking, July of 2022. Or I'm sorry, July of 2000. I know that's a long time ago because I was just about finished with high school then.
I was not live then.
Thanks. So let's talk about some of the thanks for rubbing it in. All right. By the way, if my mic sounds bad, I've had mixed reviews. I've had two people say mic sounds bad, one person say mic sounds good. So I've adjusted the settings as we go. Just send me a message if it needs fixed. Top movers this week. So the top 5 in terms of looking at the just top 100. I know that there's surely some little tiny, micro caps out there that just blew this away. But top 100. I'll give each of you a guess just one project you think is in the top 5 biggest growers this week.
Self-key.
Okay.
Steal that one from Mr. X.
Yeah, do that for Mr. X. What about you, Mr.?
Oh, no idea, man. I'm
I
gonna
like
go
putting
with
you on the spot in front of hundreds of people.
exactly. Thank you, thank you. I'm just gonna go with Ave. How about that?
Okay. Okay. You know what? You win this round. You got a beer, sir. Ave was number 3, 25% growth week over this past week. And actually almost all of the top movers were DeFi or DeFi related. The exception to that is Quant, which I don't know too much about. I've heard of it. It's like a cross-chain operating system layer set of services. That's number 1 at 30%. Then Convex, Aave, both DeFi. Polygon, which essentially is DeFi. Polygon's up 25%. ICP, which I've been known to make jokes about at times, but also am sometimes borderline bullish on. ICP's up 20%. And then Uniswap, obviously the king of DeFi, 16%. So a lot of DeFi stuff, and I think this is a good opportunity too. If you're thinking you want to start getting into alts and you haven't been, and you're just you'll get mixed signals. Some people will tell you only invest in Bitcoin and or Ethereum at this point. I say if you're DCAing, you could do more. This is a good time to monitor the performance of altcoins and see what projects either have big news coming out, have spicy roadmaps, and or are outperforming the market. And so, I know the news on some of these is pretty big. Aave is the one I'm watching. They're going to be coming out with a stable coin, but then who isn't? Do you guys remember? Is like Shib coming out with a stable coin? I forget. Or Floki or
Coin.
It was one of the dog coins. Mm-hmm. Yeah, everyone is, and that's not necessarily a bad thing. I saw a really good write up on Twitter about this, and if managed effectively, there is something to be said for having a lot of kind of native stable coins to different protocols, because that gives them a little more control over it instead of having, putting a lot of trust into third parties for their stable coin. For example, if Gemini, Binance, Coinbase, if they have their own stable coins, then they're incentivized to make sure that they have enough liquidity for it. And especially because they're under a little more scrutiny than some of these other guys. All right, top losers the past week. I'm just going to tell you, as number 1 top loser in the top 100, but it is in the top 100, is Terra Classic. I don't know how that thing is still in the top 100.
I was going to say surprise, but actually, yeah, kind of surprised if it's still alive. Yeah.
Yeah, one I'm a little disappointed in, Synthetics. I know you know that one, Mister. It's
Yes, sir.
I'm actually, it's been historically in the past a big DeFi player, but it is struggling on price action. I did see some news though. It said that they were working on a rewrite of the entire protocol because Synthetics was founded in 2017. I mean, this is 5 years ago. To me, that's like OG DeFi. I know there's some older stuff, but you're back in the simpler days. So that's something to watch. There's actually a lot of utility behind Synthetics. And I think depending on how that rewrite goes, that might be pretty spicy to get in on. I don't have any details. I'm just sharing the news. I don't know. What do you think, Mister? Is that something you're the DeFi guru? I mean, what's your thoughts on Synthetic kind of modernizes?
Yeah, I think I've always been a fan of those guys. I don't have any exposure personally myself, but I think what's really interesting to see is kind of the old guard in DeFi taking a little bit more of a prominence in terms of being on stage in the DeFi ecosystem. And whether it's Uniswap, we can consider them an OG too, right? Or it's Synthetics. I think the rotation away from super risk on mode into just more what is analogous to value plays is starting to kick in, right? And some of these projects that have had more time to build, they've had more time to really think through their models and really focus on utility and true value, bringing that value to their investors. I think that's starting to play out. So all that to say, yeah, I'm still bullish. I'm, not really looking at price action on Synthetics, but overall, in terms of the ecosystem, I think it is really interesting to see that, the the price action itself, I think, is a little bit of a factor of some of the tokenomics models that are out there as well. But overall, I think it is a good place to be for some of these DeFi OGs, and overall bullish.
Yeah, it's actually the kind of stuff that we want to see, as they were talking about in the press release. I guess I saw they're looking for more robust cross chain support. I mean, that to me, that's number one. Everything. If I don't see some indication that a project or protocol is at least thinking about cross chain, multi chain, inter blockchain, then I'm probably not interested. That's me. And also some other like nerdy engineering stuff, parsing price feeds, fine grained control over delegation of credit. I'm sure this is all good stuff, but basically the key there is that they're modernizing. So respect to them. Hopefully it works out.
And that's huge. Like that's, I think, really speaks to, what speaks to me in that laundry list of improvements that they're making is the changes they're making that are going to improve their composability, right? And that goes hand in hand with their cross-chain support. That's huge, right? It's super techy and it's definitely not sexy, but the entirety of DeFi is built on the concept of composability, which at a high level is essentially just the ability for you to use different DeFi projects as building blocks, right? To be able to like connect them together to create new strategies or new protocols altogether, right? That rely on other projects. And that is a really good focus on utility in the DeFi ecosystem. Would be great to start seeing that utility cross over into the real world, but it is such early days right now that, really right now, it has to be focused on delivering that utility within DeFi, within crypto. And they're doing it, right? If we're talking about cross-chain support and composability, I think that's huge. And that sets up Synthetics for being more successful right down the line. So yeah, it just goes back to my bullish thesis, in the beginning.
Mm-hmm. So let's talk about our favorite centralized finance services, Voyager and Celsius. It looks like Celsius has paid off a lot of its debts. And what I think is really funny about this, and actually pretty significant, is that they prioritize paying off their DeFi debts over everything else. And really, I mean, I guess to put it in simple terms, Mister, I pass this one to you. But why would they prioritize paying off DeFi stuff when they have all these other customers that they owe money to as well?
Ooh, that's a good question. I think the way that, and this is just me talking, right? But if I were them, I'd be looking at my books in two different ways, right? I'd be looking at my liabilities to my depositors, to my customers, and then I'd be looking at my operating capital and my reserve capital as kind of two sides of the books. And the only way they're going to be able to get back to a point where they can fully service all their customers is if they have a healthy book, they have healthy capital, right? So for me, the way I'm looking at that is, number one, they were probably not able to go get a loan the size of what they got through DeFi. And two, that keeping that capital healthy and repaying that loan, it's just one more step on the road to potentially making good with all of their customers. So I think they're looking at it in the right way. I'm not convinced that they're going to be able to get everyone whole because it's just such a big gap to close. But I think they're looking at it in the right way, right? Let's get the core business healthy. Let's get the books healthy. Let's get to a point where we can start to service some of our customers and then have those discussions on how to service them. Because it does no good to just fire sale all the assets for the sake of returning a percentage of all the deposits to their customers. It's better for them to get healthy and position themselves to be able to return more back to their customers. So I think they're looking at it in the right way. That's the way I would be looking at it, at least.
Yeah. And the other part that I love about this is the blockchain, kind of think of it like the Terminator movies, right? When they're talking about the machines are out to kill humans, and they're like, the machines can't be bargained with. They can't be stopped. They have a mission, and do or die. That's what they're going to do. Same with the blockchain and the smart contract. The smart contract, at the end of the day, it's not like Voyager or Celsius. These guys can go to the blockchain and say, "Hey, I need more time," or "Hey, sorry, I'm going to shut down and I'm just not going to pay you back, and I'll pay you back later." Your collateral that's on these DeFi protocols is at risk. And when you hit that point where it needs to be liquidated, then it gets liquidated. And in some ways, I kind of really respect that, because then it keeps these guys honest. It forces them to be honest. It's a shame that the meltdowns we're seeing are mostly because of human error, not because of any, it's not like these protocols got hacked or something. It's these guys made bad trades amongst themselves. They lent each other money without, being able to back it up. They made bad trades, and the rest of us have to pay for it.
You're right. And speaking to the whole blockchain, the nature of blockchain, really, which is that transparency, right, and the trust in code through smart contracts, that I think is probably contributing to Celsius's willingness to make good on that loan, because one, I think if they care at all about their brand, right, there's nothing they can do about the tarnished brand that they caused themselves through halting withdrawals, right? However necessary that may have been. But if they have any chance of rescuing their brand, they have to make sure that the most transparent versions of their books are good, right? And everyone will see if they don't make good with their DeFi loans. And I think that is all just kind of, for me, maybe my glasses are a little too rosy right now, but that's, I think, a good look for Celsius, right? Because number two, if they care about their brand, that is I think a positive thing, right? That doesn't mean that they've thrown in the towel. That means that they're going to keep fighting. Right. And that's ultimately going to be better for their customers to be made whole in the end. And, one note there, the fact that they went to the DeFi side, I think speaks volumes for that loan. I think the other thing that is really interesting is with all these knock-on effects from just the Terra collapse, right? 3AC, Voyager, the list goes on and on. Bald, right? All these firms that are halting withdrawals or have announced insolvency and legal protection for a restructuring, they are CeFi, right? And they're the ones getting hurt the worst because of the black box nature of how they manage their capital. Whereas on the blockchain, you look at all the same exposures, right? All the different DeFi projects that were exposed to the same assets and had that bad debt, they were able to clear it off, right? You liquidate, you pay off whatever you have to do, you make good, because the funds are sitting on chain and the smart contracts are just operating according to code. And once you clear that out, you can continue operating as normal. You didn't put any user funds really at risk. You still have your operating capital. So while all these CeFi firms are going belly up, it's DeFi that continues to soldier on. And I think that's a narrative that's not spoken to enough, right? Because a lot of times these CeFi projects, these CeFi firms and DeFi, they get kind of lumped into the same category, right? And it has hurt DeFi from a narrative perspective recently. And sure, it's a risk-off mood, and there's a lot of fear out there, and it's easy to point fingers and say, it's all DeFi's fault. But if you look at the bigger picture, DeFi is what's actually being able to soldier on, right? And I think that speaks to just how, I hate to say this word, how much better DeFi is than CeFi.
Yeah, actually, I agree 100%. You can't. There are certainly flaws and there's weaknesses and there's rooms to mature within the DeFi space. I've said it before. I lost a lot of money in one of the protocol hacks. That sucks. There's no insurance on these for the most part. There are DeFi native insurance services, but a lot of places and people don't use them. But the trust in the smart contract and its ability to execute without bias, without hesitation, it really does force these guys to keep honest. And if we saw anything this cycle that's just absolute insanity, is the absolute like crazy sizes of these uncollateralized loans that people were just throwing at each other. Like, hey, here's $400-600 million. I'm sure you're good for it. Have fun. And now everyone's paying for it.
Indeed.
I mean, that's just wild, man. I don't even know what to say to that. I'm like, I used to, some of these guys you looked up to, like if you're on social media, you looked up to these guys, like, you know, they might be a little bit pretentious or arrogant, but they're good at what they do to have these billions of dollars. But apparently their risk management's a lot worse than mine. I think I'm probably a pretty dumb trader. So
turns out we weren't the degens. They were.
Yeah, it turns out I should be running these, you know, $40 billion hedge funds. Hit up Poppy. I will not liquidate capital. I will not liquidate your funds, I promise. I know how to use stop loss. And Jared, I'm going to pause you for a second. So I know you just joined us. We got to bring you up on the Reddit side. Let me, can you raise your hand on there? Yeah. Cause when you talk, otherwise no one, it's just going to be silence on there, and which will be awkward. We've gone through that before.
We're having some issues today.
Yeah, the Reddit talk can be funny sometimes. All these new streaming services are a little bit funny, but it gets more stable over time. While you're working that, let's go to the next one. So the things you should be watching in the news. This is a big one. The G20, which is just is technically G20 is just the 20 largest economies, right?
Yeah.
I know I should go. Okay, I believe it is. So they've been talking, their Financial Stability Board, FSB, has announced that it's going to be coming up with its own proposal for rules to, quote, to ensure robust regulation and supervision of cryptocurrencies. So their target for this is to deliver that in October, which happens to align with two other important events in crypto space. One, the White House, the president, had put out the executive order on cryptocurrencies. You remember that from a couple months ago, and he gave them until Q4 of this year to deliver that. I think it was October, maybe November, probably October, to have all the government departments report back like, hey, either my department has some reason to integrate crypto or it doesn't. And if it does, here's how I recommend doing it. Here's the value added to doing it. And then also the midterm elections in the U.S., which we're not going to get into politics. Would you say these are going to be very divisive, spicy midterm elections? And the current party under the president is going to be looking for some wins. And this is where some people are talking about, they may say, hey, if inflation started to come down, maybe the Fed will pivot because it'll give, the stock market a boost. It'll give, the political parties, leading the government right now, give them a little bit of a boost as well going into that election cycle. But all of these things are kind of converging into Q4 of this year, which is going to mean volatility, is going to mean opportunity, and it may be very interesting. Speaking on that, I mean, what do you guys think in terms of the G20 and the US coming out with recommendations for regulation towards the end of this year? Do you think this is going to be a positive for the space?
I think it's going to be a mixed bag. I think that the regulation is needed on some fronts, but if history is any sort of guide, then we can expect overreach is definitely going to happen. And there just is, I think, just as much, I guess, skin in the game by some of these folks that are not so hot on crypto at all. The Latin et al., right? All of crypto. as much as there is going to be folks that are looking to protect their own power base, right? So I think it's going to be a mixed bag. I think we're going to see some good come out of it in terms of the protections that are going to be put in place. But I do worry about the overreach on this regulation, on this round of regulations.
Well, I think this is going to be a trial to kind of separate the herd for some of the crypto projects. You're going to see some that kind of pander to the regulation, and some that fight, are more, combative with it. That to me, that's personally a more interesting, something I'm looking to see. Like which projects kind of hold true to more of what crypto began as, what part of its purpose was, like a kind of like independence from these kind of political conflicts, and which projects essentially sell out, in my opinion.
Well, we're already seeing the groundwork be laid for that sellout, really, right? You're seeing all the VC money coming into some of the foundational DeFi projects, and former government regulators coming on board into their boards. I think that speaks volumes to your point there, Jared, right? The folks that are going to play ball, it's already happening.
Yeah. Yep. So that's good. Well, and okay, so it's going to be another situation where it's going to take the people at the individuals, that the base investors, to regulate whether that works out or not. Because no matter how much VC money flows in, if the people, like if you and I don't throw our money in after that, the VCs are out of luck. They need us to be, and this is where we can vote with our money. They need us flooding into the project afterwards. And if people start seeing like, okay, well, this is kind of a compromised project, or they're not really helping out crypto as a whole, for the, what its purpose was or what its purpose is, then when they stop getting funded, that's kind of a signal for them to quit doing what they're doing, essentially. But as long as they keep getting rewarded, they'll keep doing it.
One of the talking points in the U.S. regulation discussions is, and you're seeing this kind of pivot. Someone I don't remember who brought this up a couple of days ago in RCC to me, but you're seeing folks like Michael Saylor starting to pivot hard into Bitcoin and looking at the regulatory front and saying, "Hey, Bitcoin's the only thing." And this goes back to what the SEC was saying. Bitcoin's the only thing that's going to meet the requirement as a non-security. Everything else is a security. Altcoins are security. And there's kind of a growing trend within the Bitcoin community. It's been growing for some time to kind of align themselves in that direction.
Yep.
And it is true that Bitcoin is the most trusted and the most established communities within the space. And the argument kind of boils down to, Satoshi clearly had no intent to keep anything he mined, therefore everything in there, there was no pre-sale, there was no pre-mining, it just kind of natively happened as people came on the network, started mining Bitcoin, and now it is what it is. Versus a lot of these projects that do have pre-sales, or they did have pre-mining, or whatever it may be, right? There's layers of complexity, and some projects would meet that kind of strict security description, and others wouldn't, and others it's very gray. But that's something to keep an eye on too, because that could really have an impact on altcoins.
Absolutely. It's something I remind my more, like I'm not a maxi of any coin in particular. I'm a crypto maxi. And of course I do get into, with my Bitcoin friends, and I try to remind them of this. It's like, look, you need to watch your in group, because I'm seeing a lot of people on the inside that are celebrating, what are, legal travesties for other projects. And that's, if anything, one of my arguments, against Bitcoin was that, sure, it's incredibly decentralized in a lot of these ways, but it's showing to be politically vulnerable. And that's where your weakness is. Of course, that's where it's going to be attacked, and they should know better.
Yeah. Well, yeah. And the regulation, the policy is kind of unclear at the same time as well in some areas. So it's going to be an interesting Q4 for sure, because I think we're going to start to see the direction that these governments are going to want to go, and they're probably not all going to align. I'm most curious in the U.S. and whether or not it's going to decide to become a leader in the space, or it's going to become more restrictive.
I'm betting it's going to just, if I had to put money on it, it would be kind of a half satisfactory middle ground. There's going to be some compromise nobody wants, but then there's going to be some, some clearing of the way to make things easier as well in some areas. And it's just going to be one of those situations where the conflict, the ultimate conflict, gets pushed down the road for better or worse. That's fine.
Yeah. Yeah. So let's talk for a second, and only a second, because I don't really have much else to say about it. We mentioned earlier 3AC founders, Su Zhu and Kyle Davies. Their current whereabouts are not known, and that's according to the bankruptcy filing claims. So if you guys see them on a plane, you guys see them on a bus somewhere, I don't know, call the FBI. Maybe ask for your money back. Who knows? In any case, I guess they're on the run. But you know what? If I was them, I would be picking up Do Kwon, and I'd go find a safe house and I'd be hiding, because they owe a lot of people a lot of money. I mean, a lot of money. I have a feeling that there's some less savory folks out there that are going to be looking for them.
Oh yeah. Do y'all remember a couple? Oh gosh, I forget which cycle it was. It was 2017 or less. But there was a Korean politician looking to regulate crypto back then, and they all of a sudden went missing. Do y'all remember that?
I remember that.
You don't? Let me see if I can find an article, because I don't want to be like spreading hearsay. Give me a moment.
Yeah. Or maybe they wiped the internet of him. He doesn't exist.
Fair.
Yeah. Or Satoshi's so rich, when he finally cashes in his Bitcoin in the future, he goes back in time, builds a time machine, goes back in time, and wipes the politician away. Yeah, while you're looking for that, so let's talk a little bit about NFTs. We haven't talked about those yet. And this is more of a little bit of a warning to help you manage risk. So right now, I would say, since the success of Goblin Town, which you could describe as like an anti-meta NFT project, they basically did the opposite of what everyone was doing for the past year. They said, hey, we're going to launch for free. There's no Discord. There's no wait list. There's no cost to mint. And it worked out really well. It turns out in the middle of a bear market, people were a fan of that, just kind of throwing caution to the wind and just, buying a goofy project, good, bad, or indifferent. And now since then, though, what we're seeing is, one, Goblin Town has continued to deliver, right? So they're not just a one-time delivery. They disappear, which would be your concern on a no Discord, no wait list, no roadmap kind of project. But we've seen a lot of projects now mirroring this same strategy. We'll call it the anti-meta meta. Tons of them. I see them every week. I mean, there must be like a dozen new, no roadmap, no Discord, no whatever NFT projects going live. Now, some of those might be quality. There's nothing wrong with trying to mirror the success of, and the positive traits of other projects out there, but it's also a really good angle for lazy devs to take advantage of it. There's also good for scammers in this space to take advantage of this popularity. And we're seeing it play out. There's been a couple of these projects that have been basically scams, hacks. So you go and you mint, you think, oh, cool, I got in early. I got the free NFT mint. I'm going to flip it later. But it turns out the smart contract you just minted on is stealing your everything, stealing your NFT, stealing your coins, your tokens from your wallet. And that's not true for all of them. But I do want to caution you, that is happening. That's happened on a few already. So my tips, these are my recommendations. One, don't use your primary wallet to mint stuff. It's always a bad idea, especially if you own things that are worth money in that wallet. Two, don't rush. Honestly, when I've been watching a lot of these, you can get them dirt cheap after they mint off of like OpenSea or LooksRare. A lot of people just flip them for like a fraction of a profit. And then that way you have time to wait and see if anything fishy happens. And then 3, also, after you remove permissions from your wallet to that particular contract that you just minted from, because they may not activate the exploit right away if they have it. So it's not to scare you away from these, but it is to be more careful about it.
That's good advice. That's good advice.
Yeah, well, it's you have no idea how popular these are right now. I see it on the screen. There was a great example, maybe a bad example. So there was a free mint project that went out, and then all someone did was go in, take the same art, the exact art. They just downloaded all the art for the NFTs. They added a pixel filter to the art, and then they went live on Twitter like the next day and said, "Hey, come by." There was 2,000 people begging for a wait list spot for that. And again, all they did was put a pixel filter on an existing project. Nothing else. That was one that turned out to be a scam and stole a bunch of NFTs and stuff from people. So
that's your recommendation there of, don't mint with your primary wallet is kind of a common sense, but an often very overlooked idea in the space. You can have multiple wallets, and it is quite sensible to, distribute them amongst different levels of security. That's just, no matter how secure a chain is or isn't, that's always something you can do on your end. One thing I like to do that I think is kind of fallen out of practice in the space is to leave like a wallet on my machine or whatever machine I'm using that is kind of easy to find. And if I notice that it's empty, I know that machine is compromised.
Nice. Yeah, it's a way to think about it. So before we move off of NFTs, I'll just say, keeping an eye on some of the upcoming mints that might be spicy. I'm not an NFT expert, but I do see one. Keep an eye on Moonbird's Oddity. So Moonbird's is really one of the top NFT projects in the space. They have some really big VC Web2 backing that's really helped to sustain a higher floor. I think they're like 27 ETH floor right now. It's kind of crazy, actually. But they have a new mint coming. You can buy we'll call it the pre-sale, I guess. It's just an egg, I think. So you buy that Moonbird's Oddity, and it's going to hatch at some point into something. Now, what I don't know, is it really going to be worth it, right? I have no idea. All I know is that their original project, the Moonbird's, worth a lot of money. So I'm keeping an eye on it. I don't personally have any. I thought about buying some. It's up at like 3.7 ETH right now. It's too much for my taste. But it could be spicy.
So what's the play here? Are you saying, to your point earlier, wait to flip the NFTs or get in on the eggs?
Yeah. So if you're big in NFTs, a lot of people are looking. They're looking for a quick flip, basically. And so right now, there's no rarity, there's no anything, right? You just own an egg, so it's not necessarily the best time to try and flip. And because it got airdropped to the original Moonbirds owners, not necessarily a great time to enter now. But I know a lot of people are going to be interested once it does launch and once it's hatch and once people have rarity there. And then there's a whole slew of things that people can do to try and make good deals, sniping higher rarity at lower prices, so on and so forth. But just its association, because it's associated with one of the top NFT projects in the space. Moonbirds has been just an incredible performer. I mean, if you remember, some of you probably do, some who don't care is like, whatever, I don't care about NFTs. But they were the ones that just like mooned over to like almost 20 ETH, I feel like, in like a couple of days. It was pretty wild. But they have some big money behind them, and that's kind of the key. Is I see this division in the space sometimes with NFTs. Is you see, some of the top projects, they have that Web2 VC backing that can pump money in, and that's almost like the Fed pumping money into the market to like we saw with quantitative easing with what happened over 2020, 2021. And then you see the other kind of crypto native projects that don't have that VC backing, and they tend to have lower floor prices. Maybe it's a coincidence.
It is amazing how successful that is, and how often people don't ask that question. Like, how do I know you're not buying your own NFT from some other account and just raising the price and then dumping later?
Some of them publicly buy. Now they don't necessarily dump, but they do publicly buy, and that's not to say that they don't have other wallets with other NFTs that they sell from. But publicly, yeah, there's absolutely huge buyers stepping in at certain points.
But there's also
actually a bit of drama with Moonbirds specifically. Was that one of the original team members or project lead? I forget what his role was, but supposedly he had shortly after they launched had bought a bunch of like high rarity Moonbirds, and people were questioning it, like, "Well, you knew the rarity. That doesn't seem fair because you're in charge of the project."
Yeah. Yep. Well, now there's got to be some precedent in the traditional marketplace where someone can make blind bids on art auctions. And so I'd be curious to see like how has the marketplace solved that problem in the past? Like in theory, I mean, let's say we're a super rich guy and wanted to bid up the price of my art collection. I could pay a shill to go in and, bid it up. Like, so I'd be curious about how the market has traditionally solved that in the past.
Actually, they've experimented with different ways of minting. They do have like a bidding system that's used in some that kind of helps. Like it'll start at a certain price level and start to drop until people start to bid. That's one approach.
Subscriptions, those are good.
Yeah. So there's that's one of those things that I think they're still trying to solve. Honestly, it's tough to have a to have like a fair minting of these projects, especially because they always cap it. I mean, procedurally, a lot of it's like you draw the original art and then you use a software to like procedurally randomize, the traits on each one. You could probably make more than 10K, but they usually do 10K or less. And so you're always going to have a finite number for most of these that people are going to be fighting over. And like we saw when the metaverse other side minted not so long ago and cost the space, what was it, like $100 million in gas? It was something wild.
I did end up finding that article on the topic of politics and regulation coming to crypto. This is from 2018. You can search South Korea's cryptocurrency regulator found dead at home. But if you go into the article for more details, it just says he died from some unknown cause. But of course, like at the time when that news came out, everyone was, blowing it up for the hype. Like, oh yeah, he was trying to regulate crypto and then all of a sudden disappeared.
Yeah. You never know. But I think for the most part, some people at this point are going to welcome the regulation given how this cycle went.
Unfortunately, yeah.
So this is good news. Terra, which is defunct, Terra projects are moving. A lot of them are moving to Polygon. I can't speak for all of them, but I did see the headline that almost 50 projects that are moving from Terra into Polygon. So that's really cool. According to the Polygon CEO, he said that they'll be putting capital and resources to help migrate these over. I don't know, you guys. I think that's cool as heck. It's good to see that another project or chain or protocol, stepping up to help these guys.
It is nice to see a lack of wasted effort. If they were already, these organizations were together, already building cool things, and then they could just kind of port over to some other chain instead of go down with Terra. That's wonderful.
Yeah. It's the part that people didn't remember is we think of the money loss, but think of all the projects and the people that worked on those projects, and the people invested in those projects beyond just having Luna and UST, but all those other projects that people were invested in suddenly like, it's a dead chain. But
yep.
Yeah. And so, good.
I was going to say that's a really awesome thing about blockchains. I don't think we entirely appreciate or understand with programming as well, is that these things are more compatible than one might consider. Like, for example, you could take an Ethereum project and move it over to something else. And yeah, you've got to change the smart contracting call and language and maybe some other RPC calls. But for the most part, your front end, your back end, things like that, you can keep it relatively the same.
Yeah, especially if it's EVM compatible. So this is the last one. Then we'll get into the Q&A. And as I told you guys, I'm going to have to step away today. This will be the first Q&A I can't stick around for. But I believe Oz is on board, and if Mister and Jared, if you guys are free, it's always a lot of fun. I think the Q&A is the best part, honestly. Yeah, so don't be shy. Reddit, on the Reddit side and on the Discord side, drop those questions. No question is too dumb. So this was interesting. If you've been active in the DeFi space or the NFT space, you might recognize the account called on Twitter and on Ethereum chain called 0xB1. So 0xB1 was this kind of pseudonymous whale of that was all into so many things. They were big in DeFi initially, and then they were big in NFTs, and then they were back into DeFi. They started protocols. They have all kinds of. They have some of the most expensive Bored Apes that exist. But it turns out that account was basically funded by Celsius, and that Celsius had given them a ton of money to play with, but with the promise that, hey, you guys, here's like $2 billion, go do your thing. And don't worry, we're fully hedged. So whatever risk you take on in the space with this $2 billion, we got you covered. You're good. It turns out they were probably not telling the truth, and that there was no hedging, and that money was at risk the entire time. So the owner of that, the primary owner of that account, doxed, and this was huge. I know, Mister, I believe you worked a project that actually had some sort of partnership at a point with 0xB1.
Yeah, definitely. That's at least in our circles, some juicy gossip. I think when I saw that, I was just like, oh man, the drama. Love seeing the docs. Love seeing 0xB1 come into the light and really actually prove that there was a link to Celsius, that effectively they were Celsius's DeFi trading team, right? And the rumors, and if you go back into some of our early podcasts, oh man, what number are we on? It's probably in the single digits of one of our early podcasts. We do mention at least once or twice just what the rumors were saying about who the identity of the 0xB1 account was. And it's just so interesting to see that they're now confirming they were essentially a proxy for Celsius to play with user funds and put them into DeFi and go into some of these higher risk plays. And yeah, they, for the most part, acted as a friendly whale to a lot of projects. And one of the projects that, I ran for a little while was a beneficiary of 0xB1's capital, right? And I think that just kind of speaks to the power of the capital that they controlled. And unfortunately, it does confirm, though, the other side of that is this capital was user funds. And we were joking back in the day, and we, making remarks about how it's very possible that they're taking user funds and playing with it in DeFi, and how bad that would be, and how risky that is. And, it could never be done because Celsius is a centralized and regulated entity. Turns out we were pretty on the nose. We were wrong to assume that they would never take such actions. But yep, just to confirm another proof point that CeFi is not really that safe haven that everybody thought it was. And these folks that, are even regulated, they're making these moves with user funds that are not broadcast. They're not known. The returns are certainly unknown, right? All in the name of being able to deliver 8-10% yield. I mean, At the end of the day, was it worth it? Is everything that we're going through now worth that? I would say no. But definitely, it's interesting to see the lawsuit that 0xB1's firm called KeyFi is throwing over to Celsius, because at that point, once the lawsuit's on the books, it's very possible that we'll soon start to see on the record what exactly caused 0xB1 to rotate out of DeFi in those early days. Because the speculation, and I'm just speculating here, not trying to get sued, but the speculation back in the day was they rotated out because of the fear of increased regulations coming down onto Celsius. And maybe that's stuff that's still happening behind closed doors today. It's just there's other stuff that we're talking about because they're more impactful and more significant, significantly affecting user funds. But I think it's going to be real interesting if this lawsuit goes all the way. There's no settlement, and we can really get to understand what the true relationship between Celsius and KeyFi was, and just how much Celsius knew and how much Celsius was lying, potentially, about what they were doing with user funds, right?
Yeah. Well, what tools did the people that invested in Celsius have to hold them accountable? That's the risk you take with centralized exchanges.
Right. If any tools to hold them accountable.
None. And I'd argue it's the same set of tools you have to hold some corporation accountable or some politician. It's whatever happens in crypto, it's worse in fiat land. And at least DeFi gives people the option to experiment where a place with people can be held accountable. In the sense that, let's say I've got some position of trust in a DAO or a decentralized exchange or something like that. I could have a bunch of assets off to the side that if I do something naughty, everyone gets to burn it. But you can choose to or not to invest in that,
Yeah, vote with your money. Vote with your vote. Really.
Yep. Yeah. Well, I mean, that's the voting with your money is way more effective than the other, in my opinion.
Totally fair enough, sir. And I think you make a really good point about the fact that whatever is happening in DeFi, and however bad it might seem, the analogous scenarios that happen in the traditional system are far worse and at much greater magnitude. That's a great point, sir. It's nobody talks about that other side. It's so easy to demonize DeFi. Oops, got a little echo there, but yeah, so easy to demonize DeFi, right? But without really seeing the bigger picture.
Well,
that you point out, I think.
We miss this so often, and I don't know what it is. I don't know if it's that because we're in a rush to come to an easy conclusion, or if it's genuine malice at some place. But people give crypto a hard time for burning energy, for its validation process, proof of work, stake stuff like that. And I mean, I'm on a proof of stake chain, but if you're going to give a proof of work chain a hard time for burning energy, are you even comparing how much energy is burnt on fiat and to maintain that structure? And that's not even to mention the amount of economic misallocation from the state, meddling in the marketplace.
Right, all in search of optimizing, right? The various actions that are taking place. Absolutely.
Central planning and stuff like that. It's wait. If you really, really love the environment, you would be trying to get money out of the hands of the state as fast as possible. There's nothing more harmful to the environment than war. And I guess there's arguably more misallocation of resources is obscene. But the U.S. military burns more diesel alone than any other organization. It's look, it's quite precious that you can finger wag at proof of work when fiat's doing what it does.
Yeah, I think we talked about that in the early days of the podcast too. Just, if you're going to demonize, and I think it was surrounding the shift for Ethereum to go to the staking side. We were just talking about, think about how much electricity is burned to maintain Wall Street. Forget all of finance, just Wall Street, right?
Yep.
The buildings, the Bloomberg terminals that are on 24/7.
Yep.
All the people and the carbon that goes into operating just a single office building, let alone all of Wall Street.
And all the banks around the world, all the brick and mortar, all the electricity for that. And then on top of that, how much of the misallocation of resources from people that in order to avoid tax, excessive tax or just taxation in general, they find themselves kind of forced into the investment marketplace to secure their money. That's people that they shouldn't be in the investment world. They should be able to have some safe place to save their money, store their money, and not have to worry about it getting nickeled and dimed and taxed away. But that's the world we live in.
right? Well, wealth begets wealth, right?
Yeah. It can. I don't know. Wealth begets wealth. I'm not sure.
Well, I just mean that the incentives are in place now that incentivize folks with wealth to participate in the system versus bootstrapping new value and creating new wealth, more value rather than optimizing existing value.
Yeah, I'm really not sure because so much of the wealth we have now is just it's not genuine wealth. It's people like, okay, we have a class of people that can do things that no one else can. Those are our politicians. Like they have special powers that no one else can do. They can, they can pull a gun on you. They can make you do this, can make you do that. To me, that's way more influential than someone having money. And so, yeah, what's the first thing the person with money is going to do? They're going to buy a politician. If I recall, a couple of years ago, the going rate for a senator was $400,000. So it's like, is it the money or is it the political system? And what? Like, how many politicians are like they go in at they're worth a couple $100,000, they come out multi-millionaires. Because of their stock trades, that's on the up and up.
Right. Yeah. All controlled by the policies, right? I think I agree. I think I was just trying to say the same thing you are.
Yeah. Sorry, got us off on a tangent of like power and Bitcoin and stuff like that. And with TradFi to DeFi, it's way worse in fiat land. And it is something we can't forget about because that's going to be our going argument when people ask for more regulation. It's like regulation delivered us to this world. How is more going to help?